Today we're talking about Deere & Co stock, which was the worst performer in the S&P 500 on Friday. That was mainly because it brought earnings down, and what was in the earnings pretty much caused the stock to go down. And overall, Deere & Co is now sitting at a 20% discount. In the earnings, it wasn't actually terrible. The revenue and EPS wasn't too far off what was expected, but it was what was in the earnings call and the outlook which really killed the stock on Friday. What we saw is a guidance cut, and whenever we see a guidance cut in a stock, that's what can move a stock on earnings. Or if the outlook is higher, then that can cause the stock to go higher on their earnings date, and that's what really moves the stock on earnings overall. As well as what was in the transcript after the earnings call, we saw that potentially it's going to be a rough year for the stock. A lot of pressures on the stock. There was a lot of things said. Trade war was mentioned a few times in the call. Guidance was mentioned a few times in the call, and potentially the weather causing a few problems for Deere & Co. Pretty much because a lot of their revenue comes from farmers, and farmers being a little bit nervous about the coming season and being a bit edgy about placing new orders with Deere & Co. Pretty much has had the knock-on effect that Deere & Co could potentially have to cut revenues even more. Even though there's a lot of pressure on the farming sector, which is currently still Deere & Co's biggest revenue source, there's a lot of sectors that are currently still growing for Deere & Co. We saw a few sectors still growing at quite a healthy percentage, but even so, even with a few sectors growing at a healthy percentage, with the forecast being cut from the farmers being a little bit nervous and not placing them new orders, that really did affect the stock. So we're going to have a look at the stock. We're going to talk about a bit about what potentially could go wrong for the stock, what's going right for the stock, and then at the end I'll talk about if I think it's a buy and if I'm going to buy any shares into Deere & Co. So Deere & Co is currently at a 20% discount. The price is at 134. The PE is at 14, which is actually its lowest since 2016. But even so, 14 is about the right PE historically for Deere & Co. But it's not the highest it's ever been, which is a good thing. The dividend is sitting at a 2.25% yield, which isn't too bad. Ideally, I would like it to be more towards like the 3% range, but 2.25 isn't too bad. That works out as 0.76 cents a quarter that they pay. The EPS growth is 13.6% and revenue growth is 3.3%. Now these numbers can change slightly because of the outlook that's been cut, but even so, these numbers are taken from the earnings that we're expecting this year and the revenue that we're expecting this year towards 2020. So it's the growth not for this year, it's the growth for the next year. I always talk about that on this video because when I invest into a stock, I'm investing from a long-term hold kind of view. So I'm looking from somewhere between a year hold to a 5-year hold, somewhere in that margin. So there's no point in me looking at what the company's expected to do this year. I want to look 2 years ahead and see what the company's going to be doing in 2 years' time, and then that can give me a good idea whether or not the company's going to go up in share price or down in share price, and whether or not I can make money on the stock that I'm investing in. So like I say, 30% EPS growth and 3.3 revenue growth expected on Deere & Co, but then numbers could change slightly with this outlook cut. We've seen off a 20% discount off its recent 52-week highs, so we've had a little bit of a pullback overall. Not a huge pullback, but a 20% little dip is a good correction in the company to see if we can get a good buying opportunity into that stock. So kind of like negative side and the positive side of the company. So negative is that trade war. Trade war is definitely one of the big things that could affect this stock, and it already has started affecting this stock. There's been a new batch of tariffs that are coming from China. A few of them did contain agriculture tariffs, which will affect farmers, John Deere. So there, you always have to look at the farming industry with it being Deere & Co because of a lot of the orders that are placed from farmers. Because tariffs are actually on agriculture, it does affect Deere & Co. And when we look at companies like, say, Alibaba and JD, which I talk about on this channel, when we talk about tariffs, like, even though they're in China, and we see whenever tariff news comes out, JD and Alibaba get pulled down because of it, but really they shouldn't, because the tariffs don't affect them at all. This is actually one of those companies that are big time affected by the tariffs, and directly affects their revenue and EPS. So this is one of those stocks that whenever China trade war news comes out, I look at this stock and see how it's doing. As well as that, always tariffs on like Boeing, for example, and Caterpillar. Those three stocks are really the ones I look at when we talk about the China trade war. Those are the three stocks I really look at, see how they're reacting to it. Guidance obviously been cut, mostly due to the trade war. That's about 50%. Guidance as well. There was a little bit of mention about competition being a little bit affecting the revenue slightly. It wasn't huge though, and the weather as well. The weather's affected the farmers so far this year, and because of the weather affecting the farmers, that pretty much means that farmers are a bit nervous on how much revenue they're going to be making. Maybe they're not able to make as many crops, and because of them being a little bit nervous, they're a little bit nervous to go buy products from Deere and Co and get more newer tractors, for example. So that's because when we talk about that, that's 60% of Deere and Co's revenue. So that puts a little bit of pressure on Deere and Co because the farmers being nervous because of the weather, and they're not willing to spend the money either to buy the new equipment that they need. Now the positives are not too bad on this company when we look overall. Now when we talk about Deere and Co, obviously we're talking about a big massive brand, like the major player, the market leader that is in that sector. So when we talk about Deere and Co, it's a recognised company. It's got a great reputation. It's been around for years. So we've got a great brand. We've got a great market leader right there. So we don't have to worry about it going anywhere soon. Dividend, we're getting a nice dividend with it. 2.25% isn't too bad. Like I say, I like it to be more towards the 3%, but it isn't terrible. Growth, we're still, it's not a company that's struggling for growth at the moment. We've still got a 3% revenue growth, which isn't too bad. Obviously, I normally go for companies that have 10% growth, but if I'm looking for a bit more of a dividend play, then obviously I'll drop the revenue expectations down slightly. So when we look at the growth, it's not too bad. The dividend's still going to grow. Historically, it's still growing. It's at a nice payout rate. They're not overpaying that dividend out. So they can afford to keep pushing that dividend up, which is pretty good overall. Now, I'm going to talk about Deere & Co and what I think about the stock. Is it a buy, sell? Am I going to buy some shares in the company? Now, overall, I like Deere & Co. It's not a company that's going to explode 500% over the next 5 years. It's a steady kind of, in line with the market, bringing it on its return. 10% gain every year. 20% gain every year, kind of whatever the market does, it pretty much matches what the stock market S&P 500 has done that year. It's got a nice dividends, so if you like your dividend plays with a little bit of growth, it's a good one. It's a safe dividend. It's a great brand. The revenue growth is pretty stable. They're always going to be around. It's always going to carry on growing. There's always going to be that demand for new equipment, agriculture equipment overall. Obviously the revenue, I'd like it to be a little bit higher, maybe towards the 5% range, but not too bad overall. The thing you got to take into consideration is this China trade war. Depending on how long or how aggressive and the tariffs that put out will affect this stock big time, of course. So you could potentially see more downside from here. At the same time, if the China trade war kind of calms down, obviously that could potentially be a bit of a bottom of the stock. You don't really know. It's obviously hard. It's always hard to predict where the bottom of the stock is going to be, but there is still potential for a more downside of this stock. So overall, in my opinion, I think at this price, it's probably a buy, definitely a hold. I won't sell this stock anymore. I think if you're going to sell the stock, you just sold it before earnings really and took your profit there. I wouldn't say there's much point now. My opinion on John Deere or Deere and Company. Am I going to invest in this company? I'm considering it. The thing that puts me off is the revenue growth and the pressure from this China trade war could affect this company big time. But I like the little dividend play that you would have going on there. It wouldn't be a massive position in my portfolio. It would be like the Johnson & Johnson in my portfolio, a very stable, recognised company that's just going to steadily grow and have a nice dividend that's going to carry on, a very safe dividend that's going to keep going up. So I am considering it. There's a lot of companies out there that I'm kind of looking at buying. There's about 5 companies I'm looking at buying right now. But I have considered Deere & Company over the last kind of week, as well as Caterpillar and Boeing. Those are kind of 3 companies that have been hurt very much because of this China trade war. And I'm looking at buying potentially one of them. I don't know which one, but I am liking this one a little bit more than Caterpillar, because Caterpillar revenue growth is only about 0.5 or 1% compared to Deere & Co that's 3 times that. So I am considering this one, Caterpillar, Boeing. I might buy one of them, but I'm watching it. I'm seeing what's going to happen with the stock. But it's on a nice discount, so I am considering it. I don't know if I'll buy it. Just at this moment in time, but potentially don't be too surprised if you do see a video come up on this channel. But as always, if I do buy into the stock, I will update you. I'll make a video about it and I'll post it on the channel. As always, I'm trying to be a bit transparent. I always show what I'm doing in the stock market, which stocks I'm buying, which ones I'm selling. I'll definitely be selling one stock this week, I think. I'm about 90% decided on that, and I might potentially be buying 2 stocks this week. Maybe one, we'll see what happens. But when I do, I'll make a video about it and I'll update you. So that's the video today, guys, talking about Deere & Co. I hope you enjoyed it. I hope it helped you if you're looking into buying the stock. As always, give the video a like, subscribe. Thanks for all the support recently. It's been amazing, so thank you for that. I'll see you in the next video.